Just stop it. The run-of-the-mill, cheesy, humdrum bullshit status quo just tires me out. What fascinates me are the industry disruptors, the superhuman frontiersmen or women who go through hell to achieve their goals. Join me as we meet and learn from those mavericks, rebels, and business leaders that aren't afraid to piss off the establishment in order to make radical change for good. Sponsored by Johto PR, the disruptive anti-PR firm that murders your competition with cinder blocks and cyanide. This is Disruption Interruption. Okay, all right. Welcome back, everybody, to Disruption Interruption. I'm your host, KJ, and we're here today to talk to another industry leader that has steered off the lame, tired path of the status quo. Let's get into a problem that quietly kills momentum for a lot of growing B2B companies. Cash flow. If you're a giant corporation, money is usually there when you need it. But if you're a supplier, a software company, or anyone dealing with messy, high-stakes contracts, getting to that cash can feel like a fight. That's where things break. Traditional banks love neat boxes and predictable patterns, but real businesses are rarely that clean. So when your revenue is tied up in custom deals, complex contracts, or non-standard risk, the system starts working against you instead of for you. So what happens when a fintech founder decides that system is broken and actually builds something better? Our guest today has spent years working at the exact point where business friction turns into financial pressure. His bet is simple. Stop treating complex contracts like a problem and start treating them like an asset. He uses AI to turn hard-to-finance revenue into something structured, usable, and financeable, opening up liquidity that most companies never realize they can unlock. I'm so excited about this. Please welcome the founder of DealSync, Shalom Ben Or.
Thanks a lot, KJ. It was a wonderful opening. I think I will adopt it.
Good, I'll send it to you. Yeah, well, it's really nice to have you on the pod. Before we get into this, our listeners love to find out from innovators and disruptors, what's the fundamental ingredient for you that has kind of like led you in your life or your career of disruptive innovation? What's driven you?
I think, from early age, I was, want to do stuff my own way. Being a professional athlete when I grew up, and, my parents, I don't think they really liked it. And it's really for my personality to do things my own way and take my own path. And when, I grow up, when I see a problem and I have passion to solve it, I've been drawn to do so. And so far, it's been a hell of a journey, enjoying it a lot.
That's fantastic. So I love it. You're a rebel, you're a disagreeer, but all for the greater good.
Yeah, definitely.
Yeah, forging your own path. That's awesome. Okay, so let's get into this whole thing that you have been disrupting and where things have broken or been broken or really just not been able to help the companies that need the cash flow. So let's start off here. Tell me what the status quo is, what it's been like, and why it's not working.
Sure. So I think, our aha moment was that we realized that cash flow is being managed. You have cash flow management tools, you have cash flow management solutions, and you don't have cash flow programmable ways, or you don't have things that allow you to make cash flow work the way you want it to work. And we realized that this is the job of people, like this is the job of the financing, the finance office. Eventually the CFO and his team are working days and nights in order to make cash flow work for the business. They look on the best debt options. They look on how they can support sales to do better, how they can unlock other cash from the treasuries that they have. This is all things that being run by a very high level of judgment and context that is within the heads and of the CFO team and the meetings they're having. And I think this is the status quo. The fact that, these things are being done
just explain something to me a
people.
little bit. When you say it's not programmable, like unpack that for me a little bit more. Like, what does that mean?
Yeah, it means that very much to how you open up. Eventually, cash flow is something that you get issues and you need to solve them. So it's
Yeah.
a reactive way of work. If eventually the way your cash flow is being defined is by your sales team, like the
Yeah.
sales sell, and eventually what they sold is your cash flow at the end of the day. And a lot of when a company growing, they start putting people there. So they put a deal desk. They have someone who is in charge on the debt. They're in charge on treasury. So they start to unlock and these cash flow problems that they have using people within the finance team. So it
So the
starts to grow
problem with
basically.
that is that you're saying it's reactionary, right? So
Yeah,
they have an issue, they need to solve it, then they go look for a solution. And the
correct.
solutions are generally, I mean, there's only so many solutions for that problem.
Yeah, basically you go and find you go for a debt, eventually trying to find a liquidity, an external liquidity to assist you with the cash flow. So your immediate step would be, hey, I have cash flow issues. Let's bring external capital to bridge those issues. So your immediate instinct is to bring external capital. It takes time. And as you said rightfully, eventually, if your revenue is a bit more complex than standard, it will take more time to fit the box of the lenders.
And the box for the lenders are getting tighter and tighter.
Correct. And the business models are becoming more complex and more complex.
So, yeah, that's an interesting dichotomy, isn't it?
Yeah, definitely.
Yes. Yeah. So, what is that doing? So, what is it doing to companies? What's happening because of that situation? What are you seeing?
What we're seeing is that the CFO need to solve a lot of problems again in an old world solutions where he need to find people to assist him find the right debt, assist him set up the right materials for the lenders, then assist the CFO to get it, operate it, and eventually implement it within the sales to cash process. So from sales agent selling something or account executive sell something until the moment you have a cash in your dollars land in your bank account.
Right. Yeah. And with that, it seems like it puts a lot of unnecessary strain or additional strain on the resources that they have.
Correct. What we're saying is that like eventually if you're a B2B company not doing the pure SaaS, you probably have 20 to 30% of your revenue stuck somewhere in the process. So it's either stuck or lost within the first step of the sales process or closing the deal with unnecessary discounts and commercial terms that doesn't fit the requirements you need from a finance perspective, then it's stuck because you have long days until you get your money, you have friction within the process, and you don't have the right facilities, the financing in place in order to help you bridge that. So I think, this is a massive constraint. It's $10 million company making revenue a year, $2 to $3 million is stuck somewhere at any given moment.
Right. Yeah, well, that's a lot.
Yeah.
That's like
Yeah.
that's like a third or a quarter of their revenue, right?
Yeah, definitely. And then the CFO, and again, coming back to the reactionary owner or the CEO say, hey, Mr. CFO, solve it. Like we have issues, go ahead and solve it.
Right.
And the CFO need to solve it. And it's a it's a vicious loop because he doesn't have an extra time on his hand.
Right. No, and he probably doesn't even know of all the solutions out there.
No, no, it doesn't. What we found is that, CFOs go to the places they know, which usually are not necessarily the right ones for them. And it's a trap because it takes it takes too long to get
Right.
what you want.
Are there, so it's very interesting about this research. Are you finding, I have so many questions. Are you like, first of all, I don't even know where to go. What is the like, how big is this market? What is the range of companies that you're finding have this real pain point that need it? I take it it's middle market or small
Correct. So
businesses?
yeah, so we break it down into a few buckets, but asset-based lending, the one we unlock for businesses, is a $1.5 trillion industry that runs on emails, PDFs, and meetings. So in order to unlock this liquidity, you need again a lot of emails, a lot of PDFs, and a lot of meetings. Then if you look on the B2B software industry as a whole, as a sales-led businesses, you're looking on a trap capital for around $250 billion. So combining those two, it's a massive market that still runs on, again, People meet people, exchange PDFs, and eventually share Excel.
It's incredible. And so the range of the size of these companies that need it the most, what is that range of revenue?
Yeah, so our clients are between $5 to $50 million in
Okay.
revenue.
Okay.
We found this is a sweet spot for companies. They are growing. Again, issues are piling enough
Yes.
that the CFO need to be tasked to go and find solutions. And the first solution they think of is that we see there is lots of other challenges within the sales to cash, which we solve. We eventually bring finance service to the CFO office. So we also support with the deal desk and the treasury elements of the sales to cash process. We start with the debt because eventually this is, their most urgent issue they want to solve.
Right, right. Fascinating. What do you find? So you're saying you mentioned this over and over. Of course, what they're looking at to get the cash flow or liquidity is more debt, right? In your particular research, is there particular types of debt that they typically fall into or they go into or they easily find out about because it's been around for so long or it's what people recommend or
Yeah, definitely. They try to go for the revenue-based financing. The solution that was very good for SaaS companies. So eventually private credit and also banks get into underwrite recurring revenue. So eventually SaaS allowed businesses to show that they have revenues that are recurring month to month, year to year with a certain amount of churn. And was very good in underwritable asset. The thing is, this became a shaky asset because of what AI did to SaaS and this sentiment around it. And the
yeah,
fact that with SaaS, you can take so much value, and with outcome-based, usage-based, and other models, you can take much more value, which doesn't get into the recurring bucket. So eventually, you leave a lot of money on the table using the revenue-based financing.
wow. So how did you come across this, right? Where you're looking at this and you're like, well, what the hell is going on here?
So I studied finance by building a fintech company in Africa. So my business school was building a fintech business in Africa. And what we did there is working with banks and afterwards also finance ourselves. We finance commodities. And what we found is that when you sell avocados, it's really clear to you what you sell, the economics and the financing abilities that you have. Everything is very structured. And also for financiers, everything is very structured. You have the documents you need, you have the timings. Capital is really easy to come in and come out from international trade in commodities. Anywhere else, it isn't. And you touch it, it's because it's not within the box.
Right. Fascinating. So that's how you got into it. And then you started noticing this bigger problem, right?
Correct. I
Yes.
moved to a different business and I spent a lot of time in the US speaking with CFOs of businesses. And what I realized is that what their main job is to try and put stuff within the structure and to operate these complex sales to cash processes that eventually allow them to unlock liquidity with that, unlock better transaction within their sales teams, and of course, eventually optimize their cash flow. This is like top performer CFOs. The thing is, not everyone's a top performer for CFOs.
Right. Yeah, you're right. It's probably like a top 2%, right? Yes.
Yeah.
Yeah, and it sounds like you're trying to fit like a flat ball bearing into a round ball bearing. It's like a flat ball bearing trying to go. Okay, so, a lot of disruption is blind because people haven't been able to see the solution or they don't know that there is a solution there. What is the simplicity of fixing this? What have you done?
I think first of all, what we did to reach the point that we are now is to break down the CFO stack. And what we found is that it's based on 3 layers. Base layer is system of records, ERP, Excel sheets, the ones that you store your data and you make sure that everything is intact. Second layer is the workflows. Most of the software and the solutions are within this layer. Eventually, it's allowing processes to move with as little as friction as possible, but it's simple. It's basically simple as workflows across the CFO stack. Then you have another layer, which this is the most interesting one for us. I think this is the most interesting one. This is the judgment layer. It's the one that, the CFO is there. His treasurer, his controller is there. is making the high stake actions, is there for the meetings, is making the decision at the judgment level. And so far, this judgment level wasn't able to absorb technology because technology wasn't able to take decisions with the amount of context you have in this layer. And eventually, what we build in order to be in that position is eventually to build this amount of context and judgment solution in order to operate with CFO at the same level.
Okay, can you put that into like, give me some math, give me an example of a company like
Definitely.
doing this. Yeah.
So we have I will choose, I think, one of the is like the most common example in today technology scene, which is an AI technology company for physical infrastructure. They basically do energy saving. Eventually, it's a pure software, right? You should be able in a old world SaaS do a seed base and sell it in a seed base, right? But it doesn't work for outcome based AI solution because eventually you promise an outcome, meaning you can't like if you sell it on a seed base, you lose a lot of value.
Yeah.
If you sell it on an outcome, you have a way different ball game from a value perspective, but also much more difficult from a cash flow perspective because you can charge only when the outcome achieved. Um, and again, it's not something that the traditional asset-based lenders are able to underwrite because they have a very new to them asset.
Yeah.
And what we're doing for them, basically, first of all, we are able to create an asset out of their revenue and bring there a lender who can bridge their cash flows, a lender which is eventually a pure asset-based lenders that know how to deploy capital into a container of avocado, a transaction of a
Right.
container of avocado. Here we bring them into an AI solution deployment. And also we support them with the entire sales to cash process. How you navigate the fact that you have a client on the other side, you can finance it, you can be much more, you can take much more value because you can bridge the cash flow and you can be much more competitive.
Yeah. Wow. I find that fascinating. What do you find is your biggest challenge right now in getting people to understand this?
So when we're speaking with the CFOs and the clients, it's very easy for us
They
because
get
they
it.
live the problem. They get it
Yes.
very much.
Yes.
I think when we speak with VCs or investors, it's a bit more challenging because fintech so far, or in most conversation I have, it's been clustered in bucket. You're doing treasury, you're doing cash flow, you're doing workflow process. We coming in and say, hey guys, we want to create cash flow programmable. We want to make sure the CFO can control the cash flow at the onset, not solve issues, not seeing problems and react to problems. It means that we're coming into a judgment process, debt, deal desk, and a treasury. This
So it's a
is
new bucket and they don't get it.
it's a new bucket because it's a new layer completely, and it's a non-obvious problem,
A
but
hundred percent.
the traction that we have and the ability to say, hey, you can speak with this client or that client really help us in this conversation and to bridge the gap of what we're seeing in how you should or you can look on the fintech industry now as an investor.
Right. Yeah, it's so interesting when you're coming up with a new bucket, right? Or a new
Yeah,
category.
yeah.
It's like, what?
Not recommended, by the way.
Okay.
But if you find yourself there, I think this is the best place to be.
Yes. And then, but you're finding that the CFOs, they understand the challenge instantly.
Yeah, eventually, we onboard like 2 new clients over the past week. Both of them, the CFO is like very into the point.
Right.
I have cash flow issues.
Yeah.
I'm finding challenging because
Yes.
I need to speak with like 10 different lenders that were
Yeah.
asking 10 different stuff. No one is within what I feel I need. And
Wow.
eventually, what we're saying to, hey, we understand you, come. And like we
What a
can
pain
give
point.
100% and we turn around with a term sheet within nowadays with the technology we have, we can come with a term sheet within 14 days.
Amazing. Amazing. Wow, what a pent-up demand. What now,
Yeah.
are you mostly like, are you starting in the US? Is that where or do you have other countries that you're finding that this is also like an opportunity or a pain point? Like, what is your rollout plan?
This is definitely on our radar. We currently, coming in with, we found referral as the best go-to market currently. CFOs that speak with CFOs in groups saying, "Hey, I need that," and they refer. They're saying, "Speak with them. They can assist you with this problem you have." So referrals are very good, and currently we're seeing tons like a good pipeline in Israeli companies that are operate from Israel into the US and Europe,
Wow,
and
that's
Europe
fantastic.
and US based companies.
Yeah. That's great. What do you find, who are you finding are the early adopters of this?
So we found two very different verticals, but like the outcome-based AI companies who are coming in with a very innovative solution and a challenging business model, as I
Yeah.
mentioned, with the AI energy saving. And second are hardware companies, which are booming currently, but are not fit. They are not a good fit to the current lenders model of revenue-based finance.
Wow. Fantastic. What are the goals that you have? Like, what is your rollout plan, your goals, like your milestones that you're looking to achieve for deal flow?
So we are looking on getting into within the 3 to 6 months, getting into one new funded transaction a month. And a funded transaction for us is within $5 to $15 million in debt that we can create. So for us, it's a very strong revenue to start with. So this is
Yeah.
our goal for the near future.
Wow. Well, it's fantastic, being able to unlock this for expansion for these companies. It,
Yeah,
increases
definitely.
increases more services, increases more jobs. It puts more money into the economy. Incredible.
Definitely. And we don't stop with the debt. Eventually what we coming in, we play the debt consultant. So we assist with, setting up the debt, but then we embed within the sales to cash process and manage the debt and also support the other two functions I mentioned, the deal desk and the treasury. So we are coming in and become part of the entire sales to cash process at the judgment level, fully integrating into the workflows that they have currently.
Wow. I think this is incredible what you're doing. Are you having a lot of fun?
Yeah, I think it's being a founder is very bipolar,
What a good statement. Yes. Okay.
but I would not trade it in anything. We're having a blast, and we feel that we're on something and we're really excited about.
That's great. That's awesome. Okay, so how do people get a hold of you?
First of all, I'm very excessive. DM in LinkedIn, I'm answering anyone, at least the ones that I don't feel AI sent.
Good.
So this would be the best. And of course, I'm available on email, which is shalom@dealsynchhq.com. So feel free to reach out.
Fantastic. And then just as an aside, what do you like to do on your free time? You have any hobbies?
Yes. This is my second time. So for me, at this time, I decided to put a place for hobbies, and I surf. I surf I go to the beach once a week with waves or without, and then either surf with there is wave, and if not, I'm doing, paddle boards and stuff.
Fantastic. I love paddleboarding too, by the way. Yes. But
I
I
prefer
mean
the
by the beach.
waves. I prefer the wave, KJ,
Yes.
but paddleboard it's a good default.
Yeah, it is. Absolutely. Okay, great. Shalom, I really, really congratulate you for what you're doing and helping unlock this for businesses. Thank you very much for being on the pod. What would you like to leave our listeners with? Food for thought.
I think being optimist about what you're doing and what you're achieving, but be realistic, be truthful to what you have and what you don't, but always being optimistic that you can achieve more.
I love that. Thank you. All right, that's it, everyone. Thanks for listening to Shalom and me. I know you learned something. So if you did, go tell someone about this podcast. Tell people to go disrupt their markets and be optimistic about the future. Thanks for listening to Disruption Interruption, where we transform lives, we alter economics, don't we? And we never accept the status quo. Thanks again. Ciao for now. Because we live in a highly litigious society, with America being one of the top litigious countries in the world, here's our legal disclaimer. This information is not intended to be a substitute for professional public relations or legal advice. Do not disregard seeking professional legal, healthcare, or financial advice, or delay seeking professional PR or legal advice because of something you have heard here. Contact an attorney to obtain advice on any particular legal situation or problem. Use of this podcast or our website or any of its social media or email links do not create an agency-client relationship between Johto PR and the user.